Hello traders, and welcome to a new day trading strategy video of mine. In today's video, we'll be going over 3 simple trading tips that you can use to make better trading decisions in the market. The list that I compiled today is just a personal list that I've noticed when the mistakes that I've made with my trading, and hopefully you can use these mistakes to better your own trading. So to start off with our first trading tip, let's talk about reversals. So remember that the first major move against a trend is rarely the origin of a new trend. What do I mean by that? Well, the first major pullback that a trend gets typically is a bull trap. You know, if price is in a downtrend, typically that first move against the downtrend of a bullish retracement is usually just going to be a bull trap where weak buyers get trapped into positions and then price goes lower. And then the moment that they all sell, then price actually reverses and goes higher. Let's look at an example of this. So we can see here recently, about a week ago, price went up, as you can see, and this was, I would say, the first major move against the downtrend that had occurred. I don't think that any of these look like very, very bullish moves, especially very high momentum in a very short period of time. Price went up, about 14%, and I think it was, in like half an hour, so really quick price moving upward. This would not have been a good time to buy because this is the first major pullback that the trend is even having. So a more patient way to trade and a certainly, 2020 hindsight, but a better way that you would have gotten a better price would have been just to wait for the next major pullback and then buy. So we see that price goes down to around 6K on Coinbase, and then we get that next major pullback of high momentum. And then here is where price goes higher. So you could have bought anywhere around here, and that's going to be certainly better than buying at this market top here. You're going to save yourself a good amount of money. One more example here that we can look at. Okay, we have another downtrend, as you can see here. Similar prices, but this is November, as you can see. We don't really have any major bullish pullback. Not really there. Not really here either, because that's not very high momentum. It's kind of diagonal. I think it's some consolidation. This is the first major pullback I think we can agree with. So do we want to put our money in here, especially at this market top here, or potential market top? Well, price actually went a little bit higher and then went back down, as you can see right here. Reason this occurred again is because price rarely is going to move in a V formation. Price will rarely do this, where it goes like this, and then immediately just goes up like that. That typically will not occur in a strong downtrend or a strong uptrend as well. When the market's been going down for quite a long period of time and has not had a major pullback, and then you see a major pullback, that is going to be the bull trap, and then price is probably going to go lower. Not always below support, but sometimes price will just retrace to the 61.8 or the 78.6 of the pullback, and that can be an okay spot to buy. We can see here the price does go up after this. So if you had just waited and not bought when everyone else had probably bought who was trying to trade the reversal, you could have saved yourself a decent amount of percent of money by just knowing that this first pullback was probably not going to succeed because of how strong this downtrend was. Okay, so that's the first tip. I think this is probably the biggest mistake in my trading that I've made. I've noticed that I sometimes tend to buy support or potential support levels of that first major move against a trend, especially against a downtrend, of course, if I'm buying. And typically, price does not move much higher because typically price is going to continue going lower. And then the next major pullback or the one after that is going to be the move that actually creates a powerful uptrend. Okay, so just keep this one in mind when you're in a price situation where you think you might be trading reversal. Look for a recent pullback. If you don't see a major recent pullback where the bulls are fighting back, that's not a good sign. So this one, this next tip might seem very straightforward, but not enough traders, I think, utilize momentum in price action trading. So let me tell you guys what that looks like. We'll show you more like price is consolidating here, as you can see. Then price moves on very, very high momentum upward, as you can see right there. Incredibly strong move. I think of a large percent, like 14% again. In this time, price, and this is the important part, strong momentum upward, very weak momentum downward, as you can see here. price seems to be struggling to make new lows. Price is having no problem making new highs. So what happens in this market with this very weak downtrend and this very strong uptrend? Well, the market actually continues going upward. And again, just the reason that this occurred was because strong momentum typically will lead to a continuation in price. Weak momentum will typically lead to a reversal. So weak momentum going downward led to a bullish reversal. Strong momentum going upward led to a continuation of the uptrend. And we can see that there. Perfect. You might be thinking, wait, but didn't these examples have strong momentum? Yeah, they did. These moves right here had very strong momentum. I mean, pardon me, this move, the two failed moves that led to bull traps, those did have strong momentum, but those were strong momentum against a more major downtrend, if that makes sense. This is a major market move, but the more major market move is this powerful downtrend. So it's going to take a lot more inertia for price to actually break that. But when price consolidates like this, that's leading to whichever way price goes after consolidation typically will be where price is going to continue moving, and especially if it moves in high momentum like that, typically it's going to continue moving in that direction. And one more example, I think I have one here. We can see that this market has been consolidating for a bit, not too strong of a downtrend, especially at this point here. And the market goes weekly up and then weekly back down, and then doesn't really do anything here. But here we see very strong momentum, pardon me. And now we see some weak consolidation, kind of just going a little bit downward, as you can see right there. So what would we want to do in this market at resistance? Well, this market actually looks pretty bullish to me. I know, again, I do know what is going to occur here, but this very strong up move of about 12% in a very short period of time, and then a very weak move this way, actually led to a continuation in price, as you can see here. So buying this momentum would not have been a bad idea, especially once you saw that price had been consolidating for some time and had a lack of momentum. And then price begins to go higher after that as well, consolidates again, and then it continues going higher, as you can see right there. Yep, so just to hone in on that second simple tip, which is just imagine it like this. If you see strong momentum going downward, typically price is going to continue moving downward. Price is going to need some major change in the market for it to not continue going downward. As you can see a lot of examples of that here. Price quickly goes downward here, pullback, quickly goes downward again. As you can see here, a little bit of pullback and then quickly goes downward. Imagine a trend like a car hitting its brakes. A very strong trend, is like a car moving very quickly. If you hit the brakes on a car, moving very quickly, it's going to take a little bit of time for it to stop. But if a car is not going that quickly at all, and you hit the brakes, it's probably going to stop fairly quickly without much, resistance. Speaking about the car, of course, not price. So that's just one analogy that I find helps me. If it helps you, then hey, there you go. Just remember that a car stopping is going to go a little bit further like this, even when you hit the brake right here. And that comes into play right here. Car hitting its brakes, but price continues to move downward, then goes back upward, as you can see evidenced by there. Okay, so we've gone over momentum now. Now let's go over the third tip that has helped me a lot. And I think I've gotten a lot better at Fibonacci trading, and that's how I mainly trade now. But remember this. Remember that price tends to overshoot Fib levels more often than undershoot them. This is a common mistake that I see many Fibonacci traders making. I wouldn't really call it a mistake. I would call it more just of an inefficiency in Fibonacci trading. So more often than not, Fibonacci's, and especially on a lower time frame, are actually going to be moving not undershooting a 61.8 or a 1.618, but actually typically moving a little bit beyond it, as you can see right here. This is a 161.8, a very strong market indicator for a reversal. And the market actually just moves a little bit past it. That happens a lot, as you can see there. And then if we zoom in on this and go a little bit deeper, if I look here in this uptrend, if I had drawn a Fibonacci from this low to this high, you can see the price does go a little bit beyond it, about halfway through to the 78.6 and the 61.8, right there. And if we even plot the next one right here, as you can see right here, let's plot the high to low of this, because we want to buy into that. we can see here that price actually almost hits the 78.6 and goes a bit past the 61.8. And we actually just are going to keep seeing this occur, as you can see here, with both Fibonacci retracements and Fibonacci extensions as well, as you can see here as well. Yeah, so I don't really see many, I don't see too many examples of price not hitting those fib levels of the 61.8 and the 161.8 and coming very close but actually not touching it. Typically, like I had said here, price is going to touch it and move a little bit past it. You can see another example here in this uptrend right here. Draw the low to the high. Price actually went all the way down to the 78.6, then went a little bit deeper. And the reason for this move, for why price tends to overshoot fib levels more than undershoot them, probably is just because of the psychology behind Fibonacci's of fear and greed, where the 61.8 retracement in an uptrend represents a lot of fear in the market, where the market moves upward, then the market begins to pull back, and then the psychology behind Fibonacci say that at around the 61.8, many people are going to panic sell, many retail traders will panic sell, and that's going to lead to a sell-off point that's going to lead to a continuation of price. And typically we're going to see Fibonacci's being respected, especially at the 61.8, but you'd expect price to just go down to 61.8 then immediately go up, but typically more often than not you're going to see a large sell-off with a quick tail or a quick down move, and then price goes back up. And that's going to probably occur somewhere in between the 61.8 and the 78.6. And the same with a Fibonacci extension in an uptrend. So let's say you have a Fibonacci extension in an uptrend, so you plot the extension on the retracement, of a bearish retracement, of course. So you're measuring basically extreme greed, like I had done here. Greed would be a spot where many retail traders are buying into an uptrend. And as you can see in this example here of this move, it went a little bit past there. And even on more minor moves here, you can see it as well. Price goes a little bit past the 161.8, and that's going to just keep happening. Because people get very greedy, they buy very quickly, and then price immediately retraces because too many traders had bought. Okay, so that's going to be it for just the 3 simple tips that one can use in the market. What's the common theme and the common thread behind these tips so that when you're trading on your own chart, you can make sense of them? Well, the common thread that I found throughout all 3 of these tips are just patience. Patience in not buying Fibonacci too early. Before price even touches the Fibonacci, don't buy it. Price hasn't actually gone to the fib level yet. That's patience. Waiting for a market to actually have enough momentum to show you that it's probably a good buy. That's patience as well. And not trying to buy at the top of strong momentum, but rather trying to buy weak momentum, going the other way, of course. Some example of that would be here. Yep, right here. So we have very strong momentum going upward and then weak momentum downward. This should be your buying opportunity right here. That move right there. This very weak downward move. You could use some Fibonacci's, you could use RSI or MFI oversolds, but that's where you're going to buy into the trend. Becoming impatient, you're probably going to buy up here if you let your emotions take over. And then finally, applying patience equals profit to the last tip, which is tip number 1. The first major move against the trend is really the origin of the new trend. That totally comes into play here. When you see that, it can be kind of hard not to admit, to try to throw your capital when a major up move is happening in a major downtrend, because the profit can be so large to recover, that kind of move. You can make a good deal of money that way. Just remain patient. Remember the laws of price movements, and remember that car example that I said, that a very strong, a very strong market or a car that's going very quickly is going to have a lot of inertia for it to stop. And if you can keep that in your head, then you're going to be way ahead of other traders. We're going to be buying right here and not buying around here. All right, so that's going to be it for this video on just 3 simple tips that one could use when trading live. So I hope you guys found these tips helpful, and if you have any questions, concerns, or comments about them, leave them below. Have a good day.